Hey everyone, me Kevin here. So this market has been absolutely wild and insane, and it is just not giving up. It has been kind of fun, but I also hate investing when things are feeling euphoric. And so I have decided to take some profits. So far year to date, and I think this is pretty great. This is my buy and hodl portfolio is up 40.84%. That's all right. You know, could be better. This is my Webull account. This is where I do more of my trading. You can see the green line there was certainly much more volatile than something like the Dow or the S&P. But that's because I bought a ton of options, which didn't do too hot in May, which I bought in April, but have since skyrocketed, and I do a lot of options trading on my Webull. And of course, anytime I send a buy or sell alert, I send that out to everyone in the Stocks and Psychology of Money group, which you can see the trading profit and loss here on Webull is about 2.4 million. This is the smaller account that's on Webull. Most of my money is in buy and hodl accounts, whether it's TD Ameritrade, JP Morgan, buy and hodls, and Robinhood, whatever. Okay, so I did just sell a chunk. And the easiest way to kind of start with this is just breaking down an update to my cash position. Right now, my cash position is here. There we go. So the green at the bottom, I've got $5.5 million ready to go shopping. Now, some of that might end up going into real estate or some other purchases towards the end of the year here, but I have been taking profits where I can. I've also been limiting my exposure to some positions where I'm slightly down, and I'll talk about those positions in just a moment. So I'm at about 16.5% cash. That's about double the cash, geez, I can't talk today, cash position that I had last week. And that's mostly because I continue to see euphoria in the market that I'm not a big fan of investing into. And I'm also starting to see some trends that are a little bit more concerning. I'm going to talk about those broadly, and then I'm going to talk about specific stocks. So broadly, take a look at this. Okay, this right here is the S&P 500 SPY ETF outflows and inflows. And what you can see is we've actually last week, this is a weekly measure, last week, we had the most outflows out of the S&P 500 via SPY, ticker SPY, that we've had basically since April. Over here was April, where we had larger outflows, and that was about the 4th week of April. And we just had the largest amount of outflows. And to me, it's a little bit of a sign that potentially investors are finally recognizing this market has gotten a little bit frothy, and it might be time to take at least some profits. Now, a sector that I'm particularly watching right now is the behavior in the fintech and payment processing space. So take a look at this. So here's Webull. This is Tesla. Tesla had a pretty interesting kind of sell-off today. I'm going to talk about something I did with Tesla stock as well today. But what I want to show you is I want to start with something like Visa, MasterCard, and get into some of the fintechs. So look at Visa. This is the Visa day chart. We really peaked out around July 28th for payment processing, which is really odd, especially since we're going into a period of time where consumers have all-time highs of confidence. We're going into this period where we know we're going to have Jerome Powell longer, which is a potential sign that we're going to have supportive monetary policy longer going forward. We do have a lot of coming catalysts of news this week, but it's mostly just data. We're going to have, for example, personal income and spending. We're going to have the Federal Reserve minutes coming out on Wednesday, durable good orders, trade orders, consumer sentiment. We'll have earnings at some companies like Zoom, Best Buy, Xpeng Motors, Gap, Nordstrom's, HP, Autodesk. But you've got some concerns that maybe markets are a little bit frothy and maybe supply chain issues are going to last a lot longer than we expect. And who knows, maybe even Jerome Powell's re-nomination could potentially stoke fears of inflation again. But anyway, so Visa's payment processing, Visa just in general here, has really gone from a high of about 256 here recently to about 198, which for Visa, for a large company like this, to drop all of a sudden about 22% is pretty remarkable. But you're also seeing that at a company like PayPal. Look at this. PayPal is sitting at 185, folks. 185 divided by 310. You're down 40% from the high. And you're actually seeing today the fintech space, all of it, really on fire, like melting. Look at Robinhood, all-time lows, 27.45, and no signs of this fall stopping. Redfin, $42. It's going straight down, which is also in the real estate space, and this is despite, I mean, I suppose you could say somewhat exposed to financials. I'm not exactly sure the correlation potentially between Redfin and financials here, so maybe I'll just shelve that and just stop talking about it. But anyway, look at some of the other financials. First of all, I bagged on InsurTech this weekend, but don't blame me for causing this sell-off. I mean, Hippo Insurance is down 10%. You've got MQ, the credit card processing company here, down 9.8%. You've got Backed Holdings, another fintech here, down 12%, and it's already at the bottom of its sort of momentum curve here. Affirm, down 11% here. Software companies like Cloudflare, down 10% today. Square, down at $207. I mean, look at Square's chart here. We're about to hit May lows. I mean, we are at May lows right now. May lows were about 192. We're almost at May lows. SoFi, way back down. Look at this. We broke right past that 19-ish support level, broke straight through that. And there's no sign of this downtrend stopping, down 7.79%. You've even got the miners selling off here. Look at this Matterport this morning. This is actually a little surprising. I actually sold a bunch of Matterport this morning. Matterport this morning was up like 6%. Now it's down 6%. I mean, that's a 12% U-turn. Holy moly. Lemonade Insurance down 5.3%. These are Etsy. Etsy was up this morning. We were almost at look at that. We hit $301 for Etsy. And now that was up like 5 or 6%. Now it's down 5%. There's been a massive U-turn of sentiment here in the market, and it's mostly starting with financials. Right now, fintech and payment processors and insurtech brokerages, they are getting destroyed and wrecked. At the same time, people are drawing more money out of the S&P 500 than we've ever seen since April. So it's no surprise that we're starting to see some of these lows come back. Right now, we are still seeing somewhat of enthusiasm in electric vehicles and charging companies. And solar companies. But honestly, I have to say, Solar Edge was green today, but I don't see it in the green anymore. Yeah, look at that. Solar Edge is down now. So all of a sudden, you're starting to see a little bit of a drawdown in solar. This could just be a temporary movement here. In my opinion, it's a little bit of a red flag warning sign. The market could finally be saying, you know what, we're getting to the end of the year. It's time to potentially take some profits and recognize some gains and set some money aside to potentially buy the dip. Now, don't get me wrong, I'm still very, very long on this market, but I did do some selling this morning. I will go through some of my sells. All of them are obviously always posted, and I talk about my theses in the Stocks and Psychology of Money group, in our live streams all the time. Remember, folks, if you join the programs, you get lifetime access. So there's a coupon code that expires on Friday. You may as well just join now. It's not going to be any cheaper between now and Friday, 11:59 p.m. The price is going to go up after that. And the last thing you want to do is wake up Saturday morning and go, crap, I forgot. Consider it, check it out, look at the bundle options as well. It's the best price you're going to get for the Black Friday sale here. And let me go through some of the sales that I did this morning, which every time I post a sell, whether it's a buy, it's a sell, I try to include a little bit of a thesis as to what I'm doing, why I'm doing it, and my intentions. Is it a trade? Is it long term? What am I doing? Why am I doing it? And it's every single time. Like, I don't pick and choose. Like, if I make a trade and it turns out to be a loser, it's embarrassing, but I'm transparent. So, okay, I closed some of the sold puts that I had on AMC just to take a little bit of, to raise that cash and limit the potential of me having to use that cash. I still have my long position in AMC. I sold 1,000 Etsy. Let's see, Etsy. I didn't time it all the way perfectly at the top, and I still have a lot of Etsy, so don't get me wrong. But I did sell Etsy. We sold Etsy at 1,000 shares of Etsy, sold 10,000 shares of Matterport, both of these higher than where it is now at the time of this recording. NEO, I sold out of some options, some call options that I had on NEO. One of them was profitable by about $20,000, $30,000. One of them was down about $6K. So I really used it to free up cash. Like, for example, even though I was up $30,000 in one, I was down $6,000 another here, but it would unlock $105,000 of market value selling it. So here, I can actually show you that screenshot right here. Here's that screenshot of that NEO option that was down. Is down 6K. You know, it's up almost $16,000 on the day because NEO had a pretty nice rally day here. But I'm now freeing up $105,000 of cash, and so I'm willing to do that, especially since I'm washing it out with some of the other gains that I have. Then we've got some other sales that I made. I'm not going to go through all of them. Close some other options, some other positions, some smaller positions. I did, though, remember, I got assigned Tesla shares. I got assigned a bunch of Tesla. Let me go ahead and show you Tesla. Here it is. Okay, let's go ahead and pull that up here. Okay, so I got assigned Tesla shares because I bought Tesla shares. I bought 1,000 Tesla shares because I sold a put, and then Tesla fell because thanks to Elon Musk. And I was able to break even on that assignment, which really worked out because I didn't really want more exposure to Tesla, but I sold a put. I got a credit. I sold the put for $1,225. You can see that there at the bottom, $1,225, 10 contracts, so worth about $1.2 million. Then, of course, Elon Musk started selling. I got assigned, so I was net in for about 1177, which you could see on, let's see here. There we go, on the right side there, average price, 1177. The screenshot's showing up a little funky. Let me try to show this a little differently. There we go. If I do this, I think that's much better. Okay, so I got assigned. So basically, I sold a put promising somebody I'd pay $12.25. I was doing weekly sold puts because Tesla was basically on this euphoric rally, and it would have continued had it not been for Elon Musk selling shares. So whatever. I made money doing some of these before, and I was just milking premium. It was great. And I was willing to buy extra Tesla shares, but I didn't really want extra 10,000 or an extra 1,000 Tesla shares. But anyway, so I got assigned $12.25. My net cost was $11.77. Tesla fell to like $980. I'm like, whatever, I guess I'm diamond handing these shares, which is fine because I've got a massive long position on Tesla. But today, Tesla rallied up another like 4 or 5%. So as soon as it went profitable, these shares, it was up about $8,600. I'm like, yep, cha-ching, I'm going to ring the bell on that, take some profits. And so even though I ended up getting assigned a put, I held on until that one broke. Slightly positive. And interestingly, Tesla's been on a little bit of a roller coaster today. So Tesla is sitting right now at about, let's see, I sold this at about, when Tesla was sitting at 1180. Tesla right now sitting at a little bit of a roller coaster. Tesla bouncing up from its lows earlier. Take a look at this. Tesla did fall to about 1132. I sold right around 1180. It was somewhere around here. When did I make that transaction? 8:23 a.m. 8:23 a.m. Here you go. So Tesla was at about 1185 when I closed that position. So you could see it fell substantially more after that. It's recovered. Fine. It's volatile. I don't really care. I diamond hand my long position on that, but for my trade position, I'm glad I was able to rotate out of that, free up some cash. And so that's where a bulk of the cash, the trading cash was that I was able to free up. So this is where I am now. I'm at about 16% cash. I'm probably not going to go more than 20% cash, but I'm definitely looking for opportunities. And probably what I'm looking for in this market right now is either a continued sell-off in Fintech, which we may or may not get. You're getting a little bit of a recovery right now in a firm. It fell to 118. I've been watching it recover here. We could get a recovery. I've still got a long position in a firm, an Etsy, an Enphase. My 85% of my portfolio I'm not touching. But I am interested in watching to see if this trend continues. If this trend continues, I will buy the dip. But I'm not ready to buy the dip yet because I worry that the sectoral trend potentially is just the beginning. So I don't know yet if we've hit a bottom. I know intraday, obviously, we did a firm bottom at 118. But this is going to be a trend that I'm going to watch. And I want to see if this Fintech sell-off ends up spilling over to energy. So far, there's still a lot of enthusiasm and energy in EVs, lots of that. Also looking for a potential sell-off in NVIDIA, but I've got a cash position. I'll either use it for a larger and substantial dip, and when I see that dip, obviously I'm going to be sending alerts in the Stocks and Psychology Money group that here it is, this is where I think I'm happy buying the dip. And in my opinion, that's a way of trying to build your portfolio to get outsized returns when you're really going in heavy when something has sold off. And so I'm looking for that opportunity. I don't think we're just there yet. I could be wrong, and if I'm wrong that we're not at a bottom yet, then I'm 85% long and it's okay. If we end up going to lower levels, obviously the long positions won't be very happy, but that's okay. I don't want to pay too many taxes on all those long positions, so we're just going to keep those, diamond hand those. But I'm going to use this new cash pile that I've been able to generate through taking profits or trimming positions that I'm not as enthusiastic about going into the end of the year here. And I'll wait for some catalysts, whether it's Congress, it's drama over the bipartisan, or not the bipartisan infrastructure package, that's done, the Build Back Better plan, the debt ceiling, the government shutdown, whatever. I expect we'll get through all that just fine, but if we can get some drama that happens over the holidays, over the next few weeks here, hey, I'm ready to buy the dip. I'm excited. So we'll see what happens. Folks, thank you so much for watching this video. If you found it helpful, consider sharing it, and we'll see you in the next one. Thanks again. Goodbye.